And it's our pleasure to welcome Rob Lees from Mortgage Choice, Penrith and Blue Mountains. How are you, Rob?
I'm good. Very good.
Yes?
How are you both?
Yeah, good.
Excellent.
Just going to play with these volumes a little bit because you reckon we're a bit loud out there.
Yeah. It may have been my phone, though. Who knows?
Yeah, no, I was actually watching the dial and I think as we've in our new home here at the TAFE, I think the equipment is sort of getting a little bit better each time and maybe we need to
They're definitely making some adjustments. So,
yeah. Check with the board. So hopefully that's a little bit better for everybody out there. So welcome, Rob. How are you?
Yeah, I'm good. Good.
Good. What are we talking about today? We're talking about first home
buyers,
buyers.
what they need.
They've
'Cause
come
now
back.
That they have come
yeah,
back,
they're back.
Yeah.
which is great. Are
They're
you
back.
seeing your
Yes.
door being banged down?
Not knocked down, but we've certainly had a few more inquiries, so
Yeah.
it has picked up. And
Awesome.
yeah, so I
Do you know
thought
what
we'd
I've
talk about
been
that
surprised with, Rob, was the first home buyers. I would have thought there was a lot of them out there
Yep.
who could have jumped on immediately and taken advantage of the fact that they just didn't need to pay stamp duty.
Yes,
But
yeah.
I don't know about you, but I'm finding that the inquiry is almost at that start level. They're just excited now about the concept
Yep,
about
yep,
maybe
yep.
being able to enter the market.
Yep.
So I think they must have had their
Yeah,
noses
it's
out for a
just,
long time.
Yeah, it's just pushed a few more people to inquire, and some of them aren't ready yet. So
Yeah.
sometimes just talking about what you need to do.
What
to
you need to
qualify.
do,
So
that's
I
right.
thought
Which
it'd
is
be worth
what
talking
you're
about
going
that
to do today,
Yeah,
which
for
is
sure.
awesome. Then they could not save themselves a phone call, but like they're going to come maybe
you
a little
need
bit
to
more
know-
prepared.
You
yeah.
need to know what you're shooting for.
Yeah.
So what are the requirements to qualify for your first home?
Look, basically, it's the same for all people, really.
Yes.
But it's probably very new for first-home buyers. So you always need to have enough income. So it's about having the right income evidence so that there's a surplus income in the way that the lender qualifies the loan. Then you also need to have enough savings, cash or equity, if you're using a parental guarantee. And the third thing you need is under a broader area we would call character. So character's more
Yeah,
about
this is
how
the interesting thing,
how
isn't
the
it?
lender assesses your worthiness to actually, or the confidence they have in being able to repay a loan. So this is
And
really
how do they do
important.
that when they're not going to ever? They
This
don't meet
is-
you. They
This is
don't know
important.
you.
Looks at a lot of people are
They have
unaware
ways,
of,
Andrea.
unaware of this. So number one is a credit check. So you've got to make sure your credit file is clear. Make sure you're paying all your debts. Don't allow it to default because that could put a black mark on your credit record. It also is the conduct on your accounts. So if you're a first-home buyer with a very small deposit and you're applying for a loan and your everyday account has been overdrawn even by just a couple of dollars, you'll probably be declined. So you've got to watch the conduct on your account. And also, again, if it's buying a property with a big deposit, if you have a whole lot of unsecured loans, like might
Toys.
be car loans or whatever, toys, all those sorts of things, without corresponding assets, that also is problematic. So,
Yes.
so it's not a good time for first-home buyers to buy a new car
Yeah.
or to get a loan for a new car. Put it off.
Yeah.
Buy the
Yes.
property first.
Yep.
Yes.
So those sorts of things come under that broader area of character
Yeah.
and the way that.
And on your credit file too, Rob, they shouldn't be, that a lot of people don't understand that sitting at home on the internet,
Yes, absolutely.
click and go on a lot of things, that has a huge impact
Absolutely.
on your credit.
So every time you apply for credit, and some people don't realise this, every time you apply for credit, even if it's on the internet, it triggers a credit inquiry. If you had about 6 credit inquiries in the last 6 months, again, you'll be automatically declined.
Yeah.
Wow.
So don't start putting in applications and thinking, I'll just see how I go.
Yeah, just randomly,
Yes,
yeah. Or
yeah.
even credit cards and things like
Yes,
that. Like
that's right.
anything they're really, I would suggest Big Brother is definitely watching how you conduct yourself with your accounts. So again, if you're drawing money out at the ATM at the local pub every Friday night,
Yep.
you might
Yep.
want to rethink how
That's
you're
right.
managing your money.
And some of the lenders will troll through your accounts and see
Yeah.
what you're spending your money on. I've had lenders that have come back too in terms of living expenses, and the client's declared a certain amount of living expenses per month, $2,000 a month, and the lender says, but we've just calculated they're spending $3.5 a month.
Yeah.
Please
Wow.
explain.
from your accounts.
So,
Wow.
you know, all these sorts of things are things that we need to be aware of if we're applying for a loan, especially for the first time.
Yeah, absolutely. And it's good to get some advice from someone like yourself to start with, because if you do need to clean up your act a little
Yeah,
bit, you
yeah.
want to know what those things are and start forming some good habits.
That's right.
And it'll only take you, 6 months or something to form those
Yep,
good
yep.
habits and get a good savings plan and whatever, so you present yourself in the best light possible.
That's right.
So what about some concessions and other incentives that are being offered to the first home buyers and how they can help get them into the market sooner?
Yeah, well, at the moment, well, there has been for some time a concession for first-home buyers buying a new home. So there's a stamp duty concession there for purchases up to $650,000. Where is my notes there? Yeah, hang on. Where did I write that? Yeah, the new home. Sorry, up to 750. Sorry, 750 if it's a land and construction, and 600 if it's a newly built home.
Yeah, that's interesting, that one,
it's
isn't
only
it?
600 if the builder's already built the home.
Yep.
And they're selling it to you. It's only up to 600,000, which is quite limiting. And the other concession is the new one that's come in for established properties, and there's no stamp duty at all if you buy a property up to 650,000, and a partial concession if you're buying up to 800,000. So it kind of roughly a rough rule of thumb. For every $10,000 over that 600,000, you're losing about $1,700 of that benefit. So if you bought a property for $750,000, the concession, you're only really saving about $8,250. So the closer you can get to that 650 in your first purchase, the better that is in terms of those concessions.
And according to
It's still $8,000 though. Like it's,
yeah, that's right.
Yeah.
That's right.
according to Karen,
Better than nothing.
where were our hotspots in the mountains for median house prices? It
Oh,
certainly
yes.
wasn't Wentworth Falls or Lura
No, it
or
wasn't.
Lawson even.
No, it wasn't.
But I think traditionally like Hazelbrook and those kind of, I think Bullaborough was down there at one point, but it's
Yeah.
there's-
Karen was just doing
there's
some
not a
stats
lot.
with
Yeah,
us on the
sure.
median house prices across the mountains, and it's
And
outstanding.
it's moved, so there's still a little bit available there at the 650 mark, but
Yeah.
but there's not much under 650.
And you might have to throw a lick of paint to it, or tear up the carpet and uncover your beautiful
Yeah,
floorboards.
exactly. Which is either living in it as it is for a while or having
Yeah.
some buffer.
That's the thing with
for-
first home buyers is that I think you just got to get in.
I think
Just
just to
get
get
in.
into the
That's what we
market.
did.
The other thing too, and this hasn't actually been passed yet, is the news, the announcement that came in the federal budget of being able to use your superannuation. You could make additional payments into your superannuation to save for a house deposit, but it hasn't been passed yet. So it should be backdated if it does get passed to the 1st of July 2017. You can contribute $15,000 as a concessional, non-concessional contribution per year, and up to a total of $30,000. But the money has to stay there till the 1st of July 2018. Now, it hasn't been passed yet, so whether it's a good thing to take the risk before it's passed yet by Parliament, I don't know. But anyway, it's another benefit that is coming, but it's not
Yeah,
quite there
right.
yet.
And what about options for parents, Rob? As the market gets
children.
tougher for
Into property.
the young adults
Yeah.
to get in, is there
I saw some
opportunities?
ads on the telly that were
Yeah, I think
targeting
it was
that.
St
Oh,
George.
St George,
targeting
they
that,
were.
Yes.
the parental.
That was actually quite
Karen
funny,
too.
that ad.
Yes.
Yeah, that's right. So actually, we've just had 2 first-home buyers buy properties, both in the last couple of weeks. That was both with parents offering security guarantee. So
Yeah.
Wow.
if there's a security guarantee being offered by the parents are putting up their property, then the bank treats that as an 80% loan, and the applicants don't necessarily have to contribute anything to it. So all the costs are covered. So that's one option, but it really is a risk for parents, and it's important to think it through, because you are putting your property on the line. And I always recommend that if there's a security guarantee involved, I talk to the parents and encourage them to encourage their kids to make sure they have adequate insurances.
Hello.
Because it's not just protecting the applicants, but it's protecting the parents.
Yeah.
So things like income protection and death benefit and all that are all the more important.
Yeah.
And it's not just for you.
Yeah, you
It's
look after
also
your
protecting
parents.
the parents.
Yeah.
If they're going to put their properties up on the
I
line,
think you've got no
very,
choice.
very important to do that.
And it's good for the some of the lenders will want the parents to actually get some
Yes.
independent legal
Yes, that's
and
right.
or financial advice, depending
right.
on the lender. And I think that's important
I
too.
think it
'cause
is. You know, there is a risk involved.
this Gen Y or millennials
It's,
that can be a little bit
it's
forceful.
It's a limited security guarantee, so there's a limit to that, but it still is a guarantee. And if things go bad, parents can be asked to repay that, and then the lender can choose which of the two properties they sell.
It's
Yeah.
big. It's a big thing.
It's a,
It
it's
is.
a big
as
thing.
a parent.
And because the other thing, as a parent, you got to think you generally have more than one child.
That's right. That's right.
So you know you got to make it
So
fair.
there's that, and there's the other option is to give a gift,
Yeah.
a small gift to your children. A lot of parents do that too, and it might be to encourage them to save, and then some parents might say, look, we'll cover the stamp duty, although there's no stamp duty here in this case. So it might be to contribute 20,000, 30,000, or whatever it might be,
just to help you.
just to help them along. So there's some of the things parents can do to help their kids into the market.
That's fantastic. All right, Rob. So, if what should first-time buyers do if they wanted any more information?
Look, I really welcome, I'm sure you do too, phone calls. It's important to know what you're shooting for.
Yeah.
So call a mortgage broker, talk it through. We'll let you know where you're at the moment and what you need to do to qualify, so you know what you're aiming
Yeah,
for.
because there's two big prongs, isn't there? You know, how much can you afford to
That's
repay,
right. That's
but
right.
also, like you said in the first instance, how much deposit,
Yeah.
cash or equity do
And
you
just
have?
checking out some of
Yeah.
these other
Yeah,
things
yeah.
that may need to be cleaned up, like the conduct on accounts, or it might even be some unsecured loans that need to be sorted out, and things like that.
Yeah.
You just need to know where you're at. And what
I'm sure you take them through like some key questions that gets them thinking.
Yeah, well, look, we look at
Awesome.
it and we work out what the issues are and what they need to do to get there.
Yeah.
'Cause
As
the character
always,
side, I
Rob.
would never have thought about that. Anyway, thanks, Rob.
Yeah, well, we do all the time because we
Of
don't want to
course.
waste our time in, putting things forward. So we're finding. Are you finding that, Rob, that there's a lot more work done at our end to actually? So if
Yeah.
a broker's actually telling you, you know what, my advice is you probably need to do this, then you really need to heed that advice because
You know what you're talking about.
yeah,
Absolutely.
we're on the beat.
If people want more information, they can contact you on 47399749, and that's the Blaxland office.
That's
is
the
that
Blaxland
right?
office,
And you
yes.
also have a Penrith office as well. Thanks, Rob.
Thanks,
Good
Rob.
to be here again.